Back with closing trades right here on ET now. Holding up well, got a good leg up from the global cues this morning. And I just want to check in on how the globe is currently quoting. While, of course, we're knocking on the highs or all-time highs once again, you are seeing some of the European markets as well hold out quite okay. I mean, it's not a big move. You've got the UK budget ahead, which is why a little tentative, but at least trading with a positive bias. The US futures, though, the Dow, in fact, has been notching a third straight session of gains, or at least the Dow futures seem to be hinting so. So good 121 point of gain for the Dow futures, and the Nasdaq futures are the ones which are outperforming so far, at least 104 points higher, equating to about a 0.5% move. But let's welcome on board Rohit Seksaria as well and find out what he's making of the markets right now. Rohit, hi, afternoon. Great to have you on ET now. A lot of positive tailwinds in place, Rohit. But what do you think is going to lead to the next earnings momentum?
Yeah, good afternoon. Yeah, a lot of positive tailwinds in place. The tailwinds have started right from the government incentives, right from the tax cuts to GST cut. And RBI has also pitched in with improving liquidity in the system and cutting rates. All those macro factors should lead to better growth in the economy and better earnings growth. And we feel that the next leg of the rally here will be led by the lending financials, the BFSI sector. And that's because in the rate cut, initially they took a hit on the net interest margins, but net interest margins have broadly bottomed out. From here, things should start looking better. And they have climbed the wall of worries. There were worries in terms of the asset quality issues, but most of the asset quality issues were temporary in nature. And we believe that going forward, they may deliver much better earnings performance overall. So in that environment where the valuations are also reasonable, we believe that's one sector which will take the lead in the rally going forward.
Okay, so that's on financials. Rohit, hi, good afternoon. What about consumption, and what kind of role do you think consumption and consumption names could play in the next growth phase?
Yes, consumption is another place where we remain positive, though right now on ground feedback is quite mixed, to be frank. But given the GST cuts and the income tax cuts, there's more money in the hand of consumers. So we remain hopeful that the consumption will get a better uptick going forward. And that's another sector we are positive on.
Okay, so that's on consumption. So you've spoken about financials, you like consumption right now. Any other sector that you think viewers should be cautious about? Let's talk on the flip side, because the market overall is doing very well. You have Nifty Bank at an all-time high. But yes, you have some volatility in select sectors, like IT keeps on, showing some volatility. What about some sectors that you would be cautious on, or you have adopted a wait-and-watch approach for?
Yeah, the one sector which I'm cautious on is the entire infrastructure pack or infrastructure and capital goods, because I believe the amount of cuts and the way our income tax collections are going, the budget, there will be some deficit, and to that extent, the capital spends of the government will be lower. In such an environment where your order books, if they don't grow, we have seen in the infrastructure and capital goods companies don't perform. So right now, that's one segment where I'll be underweight. Another segment where I am underweight is your global cyclicals like your global metals and energy. That's another sector where I remain underweight.
Okay, interesting. Stay with us. Lots more to talk about.